Hello folks, this is Raj Sastry from Raj Option Trading. Today is October 26, 2021. We will talk about one of my favorite stocks. It's AYX Alteryx. As you can see here, it's into software application. These guys are a big data player. They help with the decision making, getting the insights from the data, and typically plays in the analytics market here. And every company needs analytics solutions here to really keep a pulse on the market, and this company can help with that. As you look through here, the CEO Mark Anderson has got 68% approval rating here. I would have liked this to be a little higher. We'll see how it goes here. And this Mark Anderson has got good background here. He was a president of Palo Alto Networks, and before that he was in F5 Networks. And the background itself checks out. I would have liked the approval rating to be a little higher. So with that, let's jump in here. Every company needs to understand their data, and they have to make good decision, especially in the age of COVID, supply chain disruption, and multiple issues around inflation, labor cost. This company can really help with the data and make sense of the data, get the data from multiple sources, take it through their process, and empower stakeholders and digital workers. So with that, let's jump in here and look at what their platform does. Their platform can take the data from multiple sources, as you can see here, the files, the bots, data platforms, and so on and so forth. And they can take it through their automation building blocks here, and they can provide insights to stakeholders. That's the great value proposition here. This is where companies can really make sense out of their data and see where the business is doing and where they are making money, where they're not making money, where they have to improve. They can make sense out of the whole process by looking at this Alteryx solution here. So with that, as you look through here, they got a nice $49 billion market opportunity here, and they're going after both IT as well as line of business. That's a great market prop here. I think they can take a good chunk of this market. As you look through here, they got multiple global customers here. You might be knowing many of these companies. Look here on the energy side, we got Chevron. Retail side, we got IKEA. And on the food services, you can see here we got Kellogg's, which is a big one here. Nestle, again, a great one. Kraft. And healthcare, we got big names like Abbott Labs and so on and so forth. Overall, they got a lot of great customer base here. 39% of global 2000 companies, and they're going after these big enterprise customers. As you look through here, they provide end-to-end analytics platform here. Stock is at $73. Market cap is about $4.9 billion. Stock has been doing great up until last year, but as you can see here, stock kind of dropped off in 2021 for most part. Huge drop here back in August. And as you look through here, in 2021 it's not done much. So this is where stock is not doing great here. We have to look at and see if it's a good buying opportunity here. And they are actually acquiring lower IO here to improve their solution here. And as you look through here, analysts are wondering, and folks are wondering if it's a great buy at this time. I think it's a good one, very intriguing one here at this price point here. I could see a nice bounce, and I think it's a good buying opportunity. We'll dig in a little more detail. As you look through here from a numbers perspective, I know many of you want to look at some numbers. Annual earnings per share, I think it went down in 2020. I think that's one of the reasons stock is not doing great. If you give like good earnings per share 2 consecutive years, then you drop it back here. That's why Wall Street does not like that very well. On the positive side, I like the sales growth here. Nice sales growth as you see here. This is a good one here. Shares outstanding, nothing alarming here. It's a good here, steady clip. As you look through quarterly revenue here, they're doing okay from a quarterly revenue perspective. Nice $120 million quarterly revenue here. Gross profit is also okay, not bad. But on the other side, quarterly net income, that's negative, trending in the a little bit more negative direction. I think they would control their cost a little bit, grow their top line, and more efficient on the bottom line. That would really help this company. That's one of the reason analysts are looking at the earnings per share and also income. In those two areas, company is a little bit lagging, and they also gave some tepid outlook. That's why stock came down pretty hard. So with that, as we look through the competition landscape here, we got various companies in the big data area here. Starting with Couchbase, a little company here. As we look through, Couchbase is doing very nicely. I think I also like this stock here. It's good to buy Couchbase if it pulls back a little bit. Had great few days and weeks here. And as you look through, Confluent is a new player here. They are also doing great. It's a good one to buy on any downturn here. I love C3 AI. It's good to accumulate this one also. Tom Siebel, who is the CEO, can surprise Wall Street as we go forward. And then you got few more here like Teradata. This was left for dead a while ago and came back nicely, as you can see here. Right now RSI is a little higher. If you were to buy something here, you could buy stock like C3 AI here, ticker symbol AI. I think this is just getting started here, as you can see here. Slight improvements in the price in the last 10 days. That's a good place to start. As you look through here, many of these stocks have got high RSI as you look through, but you could pick up some stock like Palantir here with a little bit lower RSI, 48. You could go after Google, which is a good one here, just 45 RSI, and you could look at a few more like Open Text, and even the low here, IBM, which came down. I still like IBM. You could buy some at this low point here. Snowflake is a little hot at this time. I would let it cool off. You could buy Amazon here, and even SAP is great. Look here, our stock AYX, bottom of the heap here, trying to improve here. I kind of sense a bounce from these levels here, given RSI is very low. IV percentile is also a little high, so even if you want to buy some put option, sell some put option and make some premium, you could do that easily with the AYX stock here with the high IV percentile of 57 here. That's a good one to make some money here. So with that, in a nutshell, AYX has been lagging its competition of late, and now it's slowly trying to turn around. As you look at its 1 day and 10 day and 1 month price points here or performance. So with that, that's why I like this company at these levels here. I would be a buyer. I would slowly accumulate AYX, and they can provide a nice surprise as they announce their earnings. As you look through here from a quarterly earning perspective, I like to look at this type of chart here. AYX is $73, $4.95 billion market cap, still has got more room to grow. But as you look through here, through the quarters, I like to see this picture because it paints a picture of how the stock is trending over the quarters. It's always good to look at the trend versus a point in time. As you look through here, market cap was $5.1 billion back in 2019, and now they are 4.95. That tells you off the bat, this is not one of those rocket ship companies. It's a little bit struggling at this time. As you look through, it was $5 billion. It became $8 billion. Then it came back to $4.9 billion. So it's got its ups and downs. The key thing is to catch this stock when it's down like this year and slowly accumulate. So there is a lot of good fluctuation. That's where traders can make some money here. And from a price perspective, it was $83 back in 2019. Now it's $73, $10 down from 2019. And look at these fluctuations here. It went to 100, it went to 121. Now it's back. This is another reason this is a trader stock here. As you catch this stock at these levels here, you can see a good bounce back as you go forward. As you look through the sales here, sales is improving slowly, but there is some ups and downs as you can see here. This is why Wall Street likes predictability. this stock is not able to give that predictability to Wall Street here, with their revenue going up and down, stock price going up. That's the reason for stock price also to fluctuate. And as you look through sales quarter over quarter change, that's a good one here. They've been doing pretty okay, but consistency is not there. As you can see here, sometimes it grows so nicely, and sometimes it's a little tepid, as you can see here, or a little low. And from an earnings per share surprise, they surprise once in a while. Whenever they surprise, stock price seems to be going higher. That's one of the reasons I think they might surprise as they go forward, and that can lift the stock price from these very low levels. That's one of the reasons for a good trade to make in AYX at these levels here. They got nice cash here. Again, cash is going down, as you can see here, at 662 right now, was 840 before. I think they have to kind of manage their cash positions a little better, but it's okay. They do have some cash here, and debt is also increasing, as you can see here. I would have liked this debt levels to go down, but looks like it's increasing, but not drastically. They can manage it. That's one thing to notice here. That's why debt to equity ratio is a little high. I would love to see debt to equity ratio lower than 1 here, but it's almost touching 2 here. That's why you got to be careful here. Company can do better job with their efficiency and their operations here. Company is a little bit sloppy when it comes to operations and efficiency. And as you look through the gross margin here, nice gross margin, a little bit down, as you can see here, but nice 90s. I think they can still, I think it's still good gross margin. And company is not making money, net margin negative. They're spending money on R&D. That's a good thing. I think companies like AYX Alteryx, they got to spend money on the R&D. They're doing it. And from a ROE, from a return on asset and equity perspective, nothing great. I think it's I would have liked this to go lower, but it's going higher. That's not a great news here. And from a price to sales perspective, this stock is still inexpensive. You could still buy. So the reason I think we can buy the stock at these levels is because stock is depressed. If they give nice quarterly earnings, stock can go higher as it did back in 2020, in this quarter and also in the prior quarter. I think this stock can surprise the Wall Street given it's been down for so long. That's one of the reasons I think it's okay to buy the stock at these levels, even though numbers don't look great. And as we noticed here, they got to do a good job on their cash position, and they have to lower their debt position, improve their gross margin, and also improve their return on assets and equity. So with that, let's jump in here. Look at what numbers we see quarter after quarter from Seeking Alpha. As you look through, they provided an awful guidance last time here, but ARR was in line. This company has been beating the numbers, as you can see here in last 4 quarters, but they provided awful guidance here. That caused the stock to really go down and did not bounce back well. If they can provide a better guidance this time around, I can see the stock going higher. That's one of the reason you could buy the stock slowly. And sometimes see here they missed here and they beat many times. So if they can continue and beat and then provide a better guidance, then the stock will go higher. So with that, as you look through what CEO Mark Anderson talked about in the last quarter, the revenue was the revenue or ARR, annual recurring revenue, that was up nicely, up 27%, which is a great story here. And they are lowering their revenue numbers here, revenue guidance, but they're maintaining the ARR. This is why market did not like it. They wanted them to provide a little bit higher revenue guidance, also maintain the ARR guidance. That's why stock tanked big time after the earnings. And they're improving the customer retention rates. That's a good one here. And as you look through here, they're also going after many of these financial customers and other big customers. That's always a good story here. The gross margin was nice here. That's in line, which is also great. and they're lowering the guidance as we talked about, reiterating their ARR. That's why Wall Street did not like it. So I think company has to improve this situation here. If they provide a better revenue guidance this time, I can see stock going nicely, going higher. I think that's possible. Let's see what this um, company does. So with that, let's jump in here, look at the performance through multiple time frames here. As you look through, company has done great in the past, 2017, 2018, 2019, all the way to 2020. If you bought this stock, you made some nice money. But in 2021, different story, down 39%. So that's why it's intriguing at this time. All the big data analytics stocks are firing in all cylinders. This company, because of their lower revenue guidance, is not doing so great. I think that's why it's good to slowly buy this company and accumulate. And this quarter can be a surprise, and stock can go higher. As you look through here, more reds than greens here. Keep watching. It's a monthly performance metric here, down 20%. This is after the earnings. Shoe down 31%. And from there onwards, again, down big time here as you scan through. And this is one more, I think it's around the earnings time, again, came down big time here. So that's why you got to be a little bit careful here. More reds than greens. The way I think is really it's a contrarian play here. Stock has been down so long. It's in a great sweet spot of analytics and helping other companies. This stock can bounce back here. I think that's why it's a good one to buy at these levels here. As you look through here, weekly performance, more reds than greens here. I think it's time that company bounces back from these levels here. And as you look through daily performance, same story. In here, I think we are seeing some green shoots here. As you can look through here, that's a good one here. I think we can slowly accumulate some of these AYX stock and go from there. As you look through here from a monthly performance pattern perspective, I love to see these type of charts. It will tell you where the company is going. Look here, 2021, company has not done well. February, March, April, May, 4 down months here. June it came up, then we got 3 down months here. That's why I think it's okay to slowly buy at these levels. Look here, we got October. We're in October here. October is generally there can be some weakness, as you can see here, especially we have some weakness here. So you could expect some weakness also, but at these levels, I think it's a good bargain. Given stock is already down big time, we could see some appreciation from these levels. Stock has done nicely in 2020 all the way to 2017, but now see here more reds than greens, and companies typically has struggling times in March time frame and also in September time frame. October is pretty okay here. There's 2 down months here, but I think it's already depressed at these levels. It can go higher in October. So I think that's what it's leading up to. I can see some bounce after the quarterly earnings. So with that, if you look through here, insider transactions, insiders have sold 26% in recent time. As you look through here, this Dean guy here, he's selling stock here. I think there is one here, huge 2.4 million shares traded here. So we got to be a little careful. It's not a concerning at this time. The directors and insiders sell from time to time. Just the percentage is a little high. I've seen much higher here, but that's alarming. When the stock is going down and insiders are selling, that's not a great story. That's one of the reasons stock is not going higher. Not alarming at this time, but something to keep in mind. And then now let's look at what analysts are talking about this company. We had an analyst initiation back in April from Morgan Stanley, and they have a target price of 93, which is always good. And we got some target price of 150 back in January here with a buy rating. I think overall analysts are warming up to this company, even though it's a little bit dated. It's April 1, which is a couple months in the past, but still I think it's a good one here. We could slowly acquiring some of this AYX stock here. And if you look through the stock chart here, it's a 5-year weekly chart. It was a rocket ship, did nicely, but a few buying opportunities as you can see here. Right now, I think it's a great buying opportunity. Stock is trying to consolidate. I can see stock going higher from these levels here. And if you look through here, we got a 1-year chart here of AYX here. Stock has been down here after the quarterly earning, a little bit lower guidance. Stock has been stuck in the mud for a while here. But look here, momentum with the RSI, momentum is rising. That's a good story here. Nice IV percentile. You could sell some put options under the current stock price. On the balance volume is going higher. That's a good sign here. Check-in money flow is going down. I would have liked this to go higher, but on the balance volume going higher, you could buy some of the stock at these levels and wait for the earnings announcement coming in November. It can lift the stock higher. So with that, if you look through here, look at the option chain here. Stock is around $74. At $75, you could see nice volume here, 141, and call volume is even higher at 80. That tells you in the options market, people are betting the stock price will go higher. And if you look through put side of the house here and keep watching the volume, not too much volume, and there's some open interest as you can see here on the put side also. Keep watching the probabilities as you look through here. 80 probability of stock hitting 80 as you look through here is around 76%. That's a good number here. So I think there is some bullishness from at these levels here. Stock can go higher. As you go through here from an option statistics perspective, number of call contracts traded 569, number of put contracts traded 280. That makes put call ratio 0.5. That tells you more calls are traded. People are betting stock will go higher. That's why they're buying more calls and less puts here. That's a good story. As you look through here, VWAP perspective, stock price, this is maybe a day or so old here. Stock price was $74, VWAP was 73. That tells you there's some negative pull here. Stock can come down a little bit lower. I think it's already at these levels now. So with that, let's jump in here and understand what to do right now. We looked at fundamentals, we looked at technicals, we looked at analysts' ratings. So at this point, I think we should make a decision here and go from there. From a annual recurring revenue perspective, that's going higher. That's a good story here. And they provided tepid guidance for softer guidance for upcoming quarter. That's why stock tanked big time. And their customer base grew nicely, and they're focusing on big enterprise customers. That's a great positive sign here. And they're also maintaining their ARR guidance and lowering their guidance for remainder of the year. That's why stock tanked big time here. I like their maintaining the ARR guidance. ARR is a key metric for subscription business that's consistently maintained here. That's a good story. And they're improving, they're experiencing improvement in customer retention rate. That's also a good one for subscription business. You got to retain your customers. That's a good one. And they're also transforming and driving higher level of operational discipline. This can help with their debt issues and their bottom line issues and efficiency. And they're also focusing on the large customers to bring in more top line revenue. That's a good story here. And they're also working with KPMG. I think that KPMG can really get some credibility for this company and help to sell more. So with that, I would say take advantage of this pullback. Stock is at a depressed level here, and it can go higher probably after the quarterly earning. It's already started making some small move. I would buy at these levels and take it from there. With that, thank you very much. Happy investing and trading. Please subscribe.